Mark Olson, Managing Director at PlanPILOT, and welcome to the webinar that we've created for our clients, planning for what's ahead, recognizing we're in a tumultuous period. Last week, we as a firm came together and decided that we needed to develop some content to assist our plan sponsor clients with better understanding what's occurring, as well as we've now also developed a participant communication that we'll be sharing after the webinar today. From a thematic perspective, what we wanted and we signaled out in our invite is that we are prepared to support our clients and continue to meet your retirement plan needs. And just some kind of opening formal comments. I've got two other individuals at the firm that will lead us in a discussion in varying areas. Tom Loftus and Chris Garrison will be hearing from on the call today. But I wanted to acknowledge that as an SEC registered investment advisor, we are required to have a business continuity plan and test it periodically. So for us, this notion of working remotely and supporting clients, despite maybe not being all in the same location, is par for the course. And we've been, building on our opportunities in this area for some time. Last week, we revisited that business continuity document and plan and updated as appropriate as we saw market conditions deteriorate and recognizing communications were of the utmost importance. In advance of this, our preparations have included internal training, testing access to client data, and ensuring each of our team members are connected via our secure networks. And we are able to talk, both through our computers as well as on our smartphones. And last but not least, that there's the cybersecurity protocols that we abide by are put in place when working remotely. Noting that the deteriorating conditions might lead us to the state, all employees were effectively those that were working in the office last week began taking their laptops home at night. And when early Monday morning, we moved to a remote status for business continuity purposes, people were up and running early as their workday began on Monday morning. And it was, in essence, a little bit of business as usual, recognizing we have a number of team members that do work remotely and a number of us work remotely when we're traveling for client meetings, et cetera. So it's a very time-tested strategy that we've been effectively utilizing for some time. Recognizing that the importance of communication, we've asked all staff to be certainly on the aware via their smartphones or laptops as it relates to client questions. So know that even if a question comes up and it's outside of what one would consider normal business hours, our viewpoint is there's nothing normal about the market at the moment. And certainly we want to be responsive and respectful to you. And so as questions develop, irregardless of when they develop, feel free to engage us in that conversation. We'll make sure that we're getting those answers to you as quickly as possible. In the spirit of kind of acknowledging what's happening in the broader marketplace, I wanted to share with you a number of certainly record keepers, investment managers, and other investment professionals have developed a number of intellectual papers, webinars, and blogs. So we've been monitoring those, and in effect, each record keeper that we work with has relayed to us that while call volume is certainly up and web activity is up, and there is some, from a transactional perspective, increase. Really, all operations are working. While participants perhaps are experiencing some extended call times, they're not super lengthy, and recognizing we've seen in this industry, other periods of this volatility that has tested their own business continuity capabilities. So from that perspective, I think some of the lessons from the past are certainly learned, and we're taking advantage of that. The other is acknowledging that there's a fair amount of information out there We're under the divide and conquer approach here at PlanPILOT. So each of our consultants are listening to various webinars and providing feedback to the broader team so that each of us don't have to listen to every single webinar, and we can disseminate those, what I call kernels of information, to the broader group. And so certainly as you, our clients, are experiencing questions or are thinking about things, feel free to lean on us. We've had a number of certainly calls with clients that have reached out. And so again, please keep those questions coming. We want to be responsive to you. So from an overview perspective, I just wanted to signal that today's 30-minute discussion, and we're certainly be respectful of that 30 minutes. We've gone through this and know that we can have our formal remarks completed within 30 minutes. And then also I just wanted to acknowledge that we specifically did not break a Q&A session into this webinar and felt that probably is best to have each of our consultants address those independently with each of you. So as you're listening to today's conversation and have questions, certainly write them down or save them electronically and shoot those over to the consultants. We're happy to help you with that perspective, certainly, right? So the perspective is we're going to talk about our support, what we're doing to help our clients. Tom Loftus is going to lead us in a healthy discussion about not only the current market downturn and results as recently as the close of yesterday's market. So our investment software allows us to quickly graphically display what's been happening. And then he's going to talk about how it compares to past corrections, because it's important to bring this in context. This isn't the first time in our recent memory where we're seeing this correction related to that. And then our newest member of the firm, Chris Garrison, an esteemed colleague who hails from such firms as Financial Engines, Fidelity, and TIA, in a client servicing role, recognizes and is going to share with us the participants, how they're feeling and what we're doing to help you with that. And then he's also going to touch on a little bit of that participant communication we developed. I think it's important just to kind of pause and think about, for each of us, we're in different parts of our path to our retirement. And I'm an avid sailor, many of you know that. And so to use a sailing analogy, it's as though, certainly there's a beacon out in the horizon. And that beacon, for my analogy, represents retirement. And so that's our goal, is retirement, and recognizing we're a little off course right now, right? There's the market conditions. And if you relate that to sailing, there's a squall out there right now on the water. And so while that beacon is there, we're not sailing right for it, that we're a little off course, but recognizing through certainly prior market corrections, and Tom will share this, the market's rebounded and that beacon comes into clarity more, and we progress towards that goal. So certainly that's one thing I think to keep in mind, not only with yourself as a plan sponsor, but certainly as participants inquire about it. Retirement is achievable if you're planning and if you're revisiting your investment strategy on a periodic basis. I think this is a healthy reminder to each of us that we need to periodically do that, regardless of the market conditions. So as I mentioned, Tom is going to lead us into the discussion regarding the markets, and so I'll pass the baton over to Tom. But as you can see on this page, our what I call our pretty pictures, right? So recognizing that Chris, again, is our newest member. He's going to talk about participant communication, and Tom, which many of you either have met him because he's a veteran of our firm, or have listened to him on a conference call and a committee meeting. He's going to lead us through a market discussion. So with that, I'll pass the mic over to my colleague, Tom.
And before I do jump into some discussion around the markets and recent performance, I want to take a minute here to pause because we certainly acknowledge that our clients are dealing with the much more direct implications of the coronavirus and the impact that this has all had very directly on your varying institutions. So we'd like to now provide some assurance that throughout these past few weeks, PlanPILOT has kept a very close eye on your plan's investments. We're aware of what's going on. We're more than prepared to answer any questions that you might have and any challenges that you may be facing as they pertain to the retirement plan and your plan's investments. And at the same time, the sub-bullet points at the bottom of the slide here reiterate a separate point. We'd like to provide some peace of mind that while there are certainly many very difficult reactive decisions that just about everyone is making right now, the retirement plan and the retirement plan's investments are not one of those. PlanPILOT's approach and how we work with our clients is intended to be very proactive. And as a result, we feel comforted that your plan's investment options are built and are prepared to weather these challenges as best as possible. Certainly, there's no area of the market that's immune to this pullback, but we feel that the processes we have in place are going to help mitigate some of these challenges. And with that said, our investment process is always focused on risk management with an emphasis on downside protection risk. At the same time, we identify and we implement investments in clients' plans that do have that long-term institutional focus, where investments are selected on a very long-term time horizon and processes are disciplined and they're repeatable. So that said, the investments in your retirement program, we're very confident that there is not a knee-jerk reaction and a change to how these managers are managing assets. Many of the managers in charge of your plan's investments have been in place for decades, and they've been through these types of challenging times before. So really just wanted to provide that assurance for you, the plan sponsors, up front. So this next slide and the chart in the middle of the slide captures how the market, which we're defining in this presentation as the S&P 500, has performed really since all of this began. So beginning at the onset of February, and while the chart by itself may not look as profound, if you do keep a close eye on the y-axis, what you can see is that since the beginning of February, the markets have pulled back rather significantly. We're down roughly 30% from recent highs. And what's really causing all of this? So earlier on, I think, and again, trying to stay as objective and focused on the facts as possible here. Earlier on, even as the epidemic became more profound in China, the acknowledgement was that from a strictly strictly health-related concern perspective, the coronavirus was not as large of a threat as, say, the seasonal flu, which everyone knows results in thousands and thousands of deaths annually. But as time trickled on, there was an increasing acknowledgement that global supply chains in the globalized world that we live in today were going to be affected by what was going on in China. At the same time, really at the beginning of March, disagreement leading to a price and supply war amongst the world's largest oil exporters created additional strain in the markets. And when you paired that supply side challenge in oil markets with reduced demand that was already being faced by oil and petroleum markets because of the coronavirus, that created a very quick downward spiral in oil prices. And while oil alone has not driven the markets downward, it was really at that point in time, in our opinion, that the true vulnerabilities of the global economy as they pertain to the coronavirus were exposed. And since that point, we've continued to see quite a bit of volatility in the markets and a general downward trend in market performance. And what is really unveiled over the past few weeks is the fact that Just about everybody underestimated just how prolific the coronavirus and its impact on the global economy will be. Here in the United States now, we're feeling the very direct effects, and we're acknowledging and now much better appreciating just how much every segment of our economy is being impacted by this virus. So certainly a lot of scary thoughts positioned up front, but what this next slide is intended to do, and what Mark has already alluded to earlier in the presentation, was that all of this should certainly be contextualized. And so the charts that we're looking on at this slide take a closer look at how the market performed during the last real financial or market crisis in recent memory for most of those on the line today, the 2008 financial crisis. And similar to the chart we looked at on the previous page, the chart we see here at the bottom of the slide illustrates just how sharply and just how deeply the markets were impacted during the 2008 financial crisis. But just above that, when we put 2008's market performance onto a broader timeline, what we can see is almost equally to as how quickly things declined. The market recovered very strongly and very rapidly, and investors that remained in the market had since more than recovered the sizable losses that were experienced in 2008. So adding this perspective and context, we feel is most appropriate, rather than facing short-term panic as things continually worsen over the past few days. The next slide reiterates many of the same points that I've always made. What we're looking at now is the performance of the S&P 500 index over the last 20 years. And the color coding that you see along the performance line highlights phases of the economy where we have very rapidly been pulled into a contraction versus a more expansionary period in recent market performance history. And as you can see, even while in the midst of things right now, the pullback in the market seems so profound and so wide-reaching. On a broader time scale, these setbacks are, one, something that we have experienced in the market, and two, something that we have recovered from 100% of the time. So the point that we want to stress and re-stress again on this page is that the markets will recover. And so what does that mean for plan participants? The chart that we have on this next slide illustrates a point that I'm going to make. Really two decisions at this point that your plan participants are left with, realizing that the markets have already pulled back significantly. At this point, participants can either take action and move their assets out of the market, under the mattress, into cash, or whatever is perceived to be safe, or participants can remain the course and remain invested. And what this chart displays, and what we firmly believe, is that the latter of those two decision points is the correct one to make. What we're looking at on the slide here is the annualized return that participants would have experienced in the markets, again, using the S&P 500 index, over the last 20 years. And a return of 6.06% is what we can see in that leftmost chart bar. And each of the next bars in this chart removes the next 10 best days of market performance over the last 20 years. And even just moving to the second bar on this chart, the 10 best days of market results over the past 20 years alone, if participants were out of the markets for those days, roughly 1/3 of the annualized return is what they would be left with. And that problem continues to expand as we move across the rest of the chart. So what this shows, and again, the point that we're trying to make here, is that history has shown us, one, that markets do and will recover, and markets and investor behavior have also showed us that you're much more predisposed to make the wrong decision if you actively and reactively try and time and reposition yourself in the markets, and participants are setting themselves up for failure if they do take action. So our encouragement to you as plan sponsors to project onto your plan participants is indeed to stay the course. And from a retirement plan investment perspective, know that many of your plan participants, particularly those who are invested in the plan's target date or life cycle funds, they are protected inherently from this decision to move out or to refocus on a new strategy. The target date funds will rebalance as long as participants continue to contribute to their retirement accounts. They are going to remain on that straightened arrow, and they will be best positioned to recover from the pullback that we're currently experiencing. So with that, I'm going to turn things over to my colleague, Chris. And what Chris is going to speak to is more of that direct impact that the market and its recent performance are having on your participants and how they might be reacting at this point.
Thanks, Tom. I really appreciate that. I think you did a great job laying out sort of the empirical side, sort of what the hard information, the data tells us. But I go back to Mark's analogy, sailing analogy. No question, we're in the storm right now, and you don't need data in a storm. It's very emotional. And when you think about economic theory, investment theory, it's based in the principle that investors are rational, and I think it's fairly easy to agree that the average 403b, 401k investor is far from rational. That's not the way they react. We are hearing a lot of bad news, a lot of really negative headlines, and invariably people are predisposed to take action. The flight or fight aspect of things. So there's this built up desire to sort of do something. And in my comments, what I'll address is sort of the two ways we're looking to help your employees. First, put things in perspective, help them understand their personal situation, because their investment performance is going to be specific to what they invest in. So if someone's fully invested in the S&P 500, they've experienced what Tom just described, but that's not the way people typically invest. LIMRA recently discovered and shared that financial literacy is on the decline, and many average investors, people who work at your institutions, they really don't have a real strong handle on what they invest in, whether it's at the fund level or at the asset class level. The communication piece that I'll share with you, I'll talk to you a little bit about that at the end, is designed to help people take a little bit of a longer view, understand sort of that their investment time horizon invariably is probably longer than they think. Even getting to retirement and then living into the 80s means that people will be investing for decades, not months. So we're going to help them understand that. The perspective we're bringing today is that of a fiduciary. You have a fiduciary role representing your institution and your retirement committee. PlanPILOT, as an independent consulting firm, we are conflict free. So what we are sharing with you today is entirely focused on supporting the notion that we as fiduciaries need to act with the best interest of your employees in mind, and act as a prudent expert would, and that in and of itself will help meet ERISA's high standard. So employees at your institutions maybe aren't expert investors. Invariably they are distressed about their losses, although they are not losses except on paper. What does behavioral finance tell us? Well, behavioral finance, for those who aren't familiar, is really the study of how these psychological elements come into play as it relates to finance. And a couple of key points to share are it's called loss aversion. And when you compare how people react to losses to how they react to gains, people react much more negatively towards losses. They hate losses in comparison to how much they might like or love the upside. Herd mentality really refers to the idea that people follow the leader, follow the headline, follow their colleague at work who says, I'm getting out of the market. And the communication piece that we'll talk about is really designed to help make sure people can understand their situation. And that's number one. And then number two would be not to make a bad decision at the worst possible time. The book that you see represented on the right-hand part of the slide is probably one of the best read books on behavioral finance. And the notion there, the key concept is employees are looking for some small amount of help, a small nudge to help keep them on track. And I'll touch on that in a second. In order, if you could move to the next slide, Tom, I'd appreciate that. Now, at this day, employees are much better positioned to take advantage of some of the technology available to them. And I'm going to show you first here what TIAA's online statement gives employees the opportunity to do, and I'll give you a couple other examples as well. If you look at a big number that's a short-term loss, certainly people feel very, very badly about that. But on the online statement, if you can read it on the screen, you can certainly look at the chart afterwards. On the far left is the year-to-date number, which of course is red. It's a negative number. It's bigger now because of the last couple of days. But what employees can do is take that negative, that short-term focus, and expand their lens a little bit to look out over longer time frames. And even 5 years on the far right, positive 4.8, is probably a short time frame to evaluate sort of where you are, but it does give you much better context. So in this case, tough month really is rationalized against some of the longer time frames. This is, of course, representative of an employee's investment. So it's the blend of equity and bond investments. Maybe they're a life cycle investor, but it's their personal performance. It's not the headline. And we are encouraging people to look for that. Take a moment. Don't just look at how much your balance is down. Look at your performance. You can actually expand that upper chart into a year-over-year view, going back to as long as you're in the plan. So that chart actually, instead of ending at 2017, could go back as far as 2011 as an example. It just doesn't, frankly, fit on the page. So just to reiterate, employees need to look at their own personal situation, whether it's evaluating performance. They need to revisit their retirement time frame and what their goals should be, what type of investor they are. On the next slide, what you'll see are similar illustrations, Fidelity and Voya, for those who use either of those two providers. They also have the online personalized performance capability. And a very nice coincidence for anyone who might have access to a Vanguard institutional retirement account, you see that the chart presented there, which is actual employee performance, is very similar to the one Tom presented. So it provides that longer term context. So hopefully, by talking about how to interpret the data, how to take a step back and look at your performance, we've given you some context that you can share with your employees. We've also developed a participant communication piece, which we'll share with you. It touches on all of the same themes we have. It provides similar illustrations. Pictures are easier to interpret than words, so it's very visually compelling, and we hope your employees are able to use it to their advantage, help get through this difficult time. It puts, just in summary, it puts the current market performance into perspective, that rationalization of the performance. It touches on in some very well-written text about how to stay the course, and then also make sure you have an emergency fund, which is something we always have emphasized, probably worth touching on now, even though our focus has been on the markets. And then making sure that as people think about retirement horizons, time horizons that lead to retirement or get into retirement, which are decades away, are really the perspective, the driving force as to how people think about things. That's the beacon. What is it? What is your goal? Your goal is not to get through this week. It's really to move forward with a retirement strategy that helps you achieve your goals. So with that in mind, we're getting close to the bottom of the hour. Mark, I'll turn it back to you for perhaps some closing comments.
Sure, appreciate that, Chris, and then thank you as well to Tom. So, but most importantly, thank you for those of you on the call, our clients, for tuning in. We are privileged to serve clients like you, and I want to underscore, we stand ready to help you in any way that you need. Candidly, our firm's philosophy is that service extends well past our quarterly meetings, and it's really what we do between these meetings that often counts even more. And I would say that these are one of these time periods. So please lean on us. As I noted, our consultants are here after hours, and ready and able to assist you in any way. So again, look for that communication from us later today. That's a recording not only of this webinar for your reference, and if you'd like to share with others, but also a participant communication that you can either send out or have sent out to your employees or post on your internet site to help those that maybe they'd be worried or uncertain about what to do. This might provide some context for them and then offer that beacon to continue to use that analogy for their absorption. And in closing, be healthy, practice behaviors that will reduce the spread of the virus, and know that together we'll get through these trying times. And again, on behalf of the whole PlanPILOT team, thank you to each of you for taking the time to spend part of your day with us, and we look forward to serving you in the future. Bye for now.